Hello everyone, and a very warm welcome to all of you. I'm Yash Trivedi from Figment Global Solutions. Welcome to our exclusive webinar on Finance Bill 2026 with respect to key TDS and TCS amendments, practical impacts, and compliance insights. As we all know, TDS and TCS provisions directly impact day-to-day tax compliance and reporting for businesses, professionals, and institutions alike. With the Finance Bill 2026 introducing several amendments, along with certain provisions remaining unchanged, it becomes critical to clearly understand what has changed, what hasn't, and how these changes affect us in practice. The objective of today's session is simple yet powerful to demystify the TDS and TCS amendments and translate them into clear practical insight that you can apply in your regular compliance process. Now, moving ahead and introducing our speaker for the webinar. We are privileged to have with us today CA Harsh Mehadia sir, who brings us with him extensive hands-on experience in taxations, compliance management, and technology-driven solutions. His practical approach and deep down expertise will help us understand these changes beyond just the bare provision of law. Without further delay, let's begin today's sessions. Over to you, Harsh sir.
Thank you, Yash. Good afternoon, all. Thank you for joining the webinar. We will keep our presentation towards TDS and TCS amendment very crisp and clear and take more questions because this time there has been no major amendments in TDS and TCS provisions, whereas the law is completely changing. We would be having a new Income Tax Act to 2025 from 1st April 2026 where all the TDS, TCS section numbers would be changing, which has already been discussed in detail in our last week presentation by Himanshu. The new section would be 392, 393, and 394. So, in today's session, I would be giving you a small presentation towards the changes in these sections, which has already been deliberated in the last session, and what has been changed out of in this budget. So, I'm sharing my screen. Please all check whether my screen is visible to you all. Yes, my screen is visible.
Yes, sir, it is.
Yeah. So coming down to section 392, salary and in TDS provisions. So government has not changed any income tax slabs this time, not given any new rebates, benefits, or changes any special deduction provisions. So everything has been the status quo, which has been there in last previous year budget has been same continued. The deductions, the income tax slabs, and the rebate benefits remains the same. So accordingly, 12 lakh is the upper ceiling limit for an individual after considering the rebate. That the no tax would be applicable if income is more than 12 lakh rupees, then the slab will start from 3 lakh rupees, and accordingly the taxation would be applied. So no changes in deduction. Complete deduction continues as slab rates only. Maintain the same rule process without any new compliances, and businesses as usual for both employees and salaried peoples. Coming down, the change which has been brought into, which was skipped in the budget, which was skipped in the new Income Tax Act 2025, was relating to the cooperative banks exemption. Previously, Section 194A gives the benefit relating to interest payout to to a banking company or to a cooperative bank. The same was missed during the last budget in New Income Tax Act Section 393, previously Section 194A, wherein the any interest payout by the deductor to a cooperative bank, the TDS was not applicable. The This was skipped in Section 393. So accordingly, in this budget, government has taken the note of the same and they have amended Section 393, in which they have now added no TDS on interest paid to cooperative banks also. The next point which government has proposed would be introduced, but the same would be introduced from 1st April 2027. And this is very important relating to digitalization of 15GH. Government has initiated this process from the depository side where they have a common source that is CDSL and NSDL. So all the shareholders, the debenture holders who are receiving incomes from against dividend or interest on securities, currently they have to submit 15GH if their income is not taxable, so that the necessary TDS deduction is not to be made to each and every company, to every debenture company relating to 15GH deductions. So government has tapped this opportunity and has introduced a provision in 15GH that you can submit a single 15GH to your CDSL or NSDL depositories. From there, the information would be fetched by the companies, and accordingly, that deduction declarations would be considered. The necessary guidelines relating to whether 15GH would require to be filed by the company or how the limits calculation would be considered. Those granular has not been provided in this budget. It would be a proper clarification would come across on the same. And additionally, this is applicable from 1st April 2027. So government has given a good buffer time to the depository companies to build up the system and accordingly be ready from 1st April 2027. So for the next tax period, this is also a new terminology which has come. Now the financial year and assessment year, previous year, these concepts would not apply. There is now a new nomenclature that is a tax year, and for tax year 26-27, this would not be applicable and it would be applicable from tax year 27-28. Motor accident claim tribunal. So this was also there previously in section 194A with a threshold limit, and was not considered while drafting the Income Tax Act 2025 in the last budget, but the same has now been added with an additional benefit, that is there will be no TDS on fixed deposits created against motor accident tribunal cases. So previously 50,000 was the threshold limit, and there was a second criteria that TDS is required to be deducted on the date of payment and not on the basis of accrual. So that was a very complicated task, and the banking companies and the insurance companies were facing too many problems because during the period the SSE is not identified who would be the owner and correct owner. So that's the reason government has given a circular previously that you can deduct the TDS wherever the court cases are pending at the time of payment. But for this MECT, the new provision which has been added in the budget, they have stated that no TDS is required to be deducted for fixed deposit on interest payment on any or without any threshold limits. So this is a good relief which has been provided by the government, and the compliance burden and the computation burden is also being eased out for the banking company because it was very difficult task to handle such type of scenarios in the banking CBS environment. So government has given a proper full waiver from TDS reduction for MECT FDs. Section 395, this deal with the lower deduction and the nil deduction certificates. So currently the lower deduction and nil deduction certificate mechanism is that we go onto the Traces portal, upload all our documentation, and based on that, a ticket is being generated. The said ticket is then being allocated to the AO, the PAN AO, for verification of our documents, the limit validations, the reason why we are asking for the lower deduction certificate. So the FM madam has stated that they would be coming out with a rule-based lower deduction certificate, wherein the necessary computation methodology would be provided, and based on the rule mechanism, if your the total income for the tax year is less, or you have carry forward losses and the necessary TDS deduction would constrain your cash, you would be provided a rule-based lower deduction certificate. So this is a very good mechanism which government is bringing, because after putting online requests also in the traces, the AO was not acting, and the request was getting rejected for necessary new documentations, or each AO was having their different type of rule to evaluate your lower deduction certificate. So now it has been taken out from the AO perspective, and it has now been made rule based. So another change in the return filing mechanism which has been brought is relating to the property purchase from an NRI seller. So all as you all know that TDS is required to be deducted if we purchase a property beyond a threshold limit. So if we purchase between a two domestic SSE, we are filing Form 26 QB. That is a return come challan, and it is being filed based on PAN number. The set provision is not available for a NRI SSE is transferring the property to a domestic SSE. So this was creating a big problem for a normal small taxpayers who are within not in audit perspective, that they were required take a TAN number first, then make the challan in the TAN number, and then file a return of 27Q, and then generate a Form 16 and issue the same to the seller. Uh, Government has seen that this is creating a problem between the SSEs. So now they have given up relief that they will bring a same form like 26 UB, which would be a PAN based form, and challan come return form, and where if the SSE is a NRI also, then also we would be able to file the TDS based from our TAN value, and no TAN would be required. Clarification has been issued by the government relating to the services provided by the contractors of manpower services. Uh, in certain cases, there has been a debate whether the manpower services provided covers under the employer-employee relationship or the manpower services, and whether the TDS is required to be deducted under Section 194C, 194J, or it is an employer-employee relationship, and as in we are making a payment to an individual contractor, or the employee of a contractor is less than the threshold limit, whether the TDS is required to be deducted or not. So a clarification has been added in Section 393 that all the services relating to manpower, if it is provided, it would be covered under the contractual services, and the TDS would be applicable 1% or 2% based on the nature of the contractor. If it is an individual or HUF, 1% would be applicable, else 2% would be applicable. So this is just a clarification provided by the government relating to the contractual services of manpower. A major change, if we can talk in this budget relating to TDS and TCS, is the standardization of rate for TCS. So there has been different rates, different threshold limits, which government has tried to rationalize this time, and they have standardized towards the 2% TCS rates, towards the overseas tour packages, scrap sales, Tendu leave TCS rate deductions, or other type of scrap sales wherever the product sales are there, where the rate limits were 5%, or in some case it was 1%. All has been standardized at a rate of 2%. For the same goes for the education remittance. There was a threshold of 7,50,000, then 5% was applicable. The government has changed the rate to 2%. Overseas tour packages, it was previously after a threshold limit, it was 20%. So government has given a single rate now, it would be applicable 2% only. So the rate standardization has been done in TCS this time. Compliance side, if we can see that this is also a provision which was skipped in the new Income Tax Act 2025 relating to late filing of TDS returns. So the same has now been added, that the late filing fee would be 200 rupees per day if we file the return after the due date. This provision was not added in the Income Tax Act 2025 previously in the last budget. The same has now been added. Additionally, they have added a new late filing uh, provision for SFT returns, the statement of financial transaction. Previously, also there was a late filing fee provision there in the SFT return, but it was applicable only if the AO enforced the same. Now, this has also been made as per the TDS only, that it would be auto calculated, and while after filing immediately you get the notice for late filing fee, that is 200 rupees per day, and it has been now capped to 1 lakh rupees. Maximum penalty which will be charged in SFT returns would be 1 lakh rupees if there is a late filing fee. So this is an auto calculation provision which has been given under section 427 subsection 3, which makes a penalty of up to a penalty fine of 1 lakh rupees for SFT returns. So this is all about the TDS and TCS amendment in this budget. Whereas we would be shifting to the new Income Tax Act 2025 from 1st April 2026. So I would be here for your questions, and if any specific points you want to understand, I would be able, if it is ready with me, the information, I would be able to help you out. Over to you, Yes.
Thank you, sir, for the valuable insights. If anyone has a question related to this webinar, please share them in the chat box. We will be happy to answer.
The time the question comes, I would be taking you through the some important dates which would be coming across. There has been no change in the TDS correction due dates. Government has mandated that we can update only last two financial year TDS returns. So coming this 31st March, all the TDS return which has been filed till quarter 3 23-24 would be locked, and you would not be able to file any new returns. So I will request everyone to file all their corrections which are pending till 31st March, 31st December 2023, before 31st March, so that your demands, penalties, your customer complaints would be handled.
Sir, one question we have received from Niranjan sir. Is there any changes with respect to TDS on foreign remittance?
So the LRS scheme, the TCS rates relating to the overseas payment, which I was talking, there was a threshold limit wherein initially the TCS rate was 5% and then 20%. The same has been now standardized to 2%. So the rate changes are there.
So one more question is 15 GS. One second.
Digitalization will be applicable to
Yes.
that. Yes. So Amolji, we have been in discussion with the income tax authorities and the other. So they have this very much on their agenda to digitalize banking 15GH, but the same is not possible currently because they don't have any common source from where a single source where we can submit 15GH, and from there all the banks can fetch this information. So that's the reason they have now initiated through the depository, that is CTSL and NSDL, and the same is not applicable for banking industry. But it is there in the agenda of income tax, and we would be able to hear something in the coming days. So the next question is relating to advertisement services fall within the scope of professional services for TDS on commission or brokerage. Can you please explain? Sir, advertisement services, there are two parts. If it is a contract, then it would be a contractual services. And if you have been have given any design or composite contract wherein the professional part is more, then it would be a professional services. TDS on commission or brokerage would not be applicable for advertisement services. Naresh ji, the TCS rate has been unified in many of the sections, but the threshold limits are as per the section only. There has been no change in the threshold limit. So there are different threshold limits for each and subsections in TCS. So that remains the same. There has been no change in the TCS provision, the threshold limits. But yes, the government has tried to unify the rate, which is 2%. Change. So, change in LDC, yes, the as I told you previously, the approval mechanism for LDC was there under the purview of assessing officer. The FM madam has told that they are trying, they would be coming up with a solution where it would be immediately granted to you based on the rule-based system and not by the AO purview mechanism. I've already answered Nareji. The 15GH currently digitalization of 15GH has not given anything proposed in the budget. There is no provision on that. This amendment, which has been currently I have spelled you out, would be coming from 1st April 2026, and the 15GH digitalization would be coming from 1st April 2027 for mutual funds and the share market industry. Mm. We'll check that if there is any definition for small taxpayer and any threshold limit has been given. Lokesh ji, my team would be updating you on the same. What is the change related to acceptance? Bhumika madam, the Bhumika ji, the difference, the change is only the submission. Previously, the deductee was required to submit all their 15GH to the deductor only. Here, government will change the law and they would allow that the 15GH submitted to the depository will also be acceptable as an acceptable 15GH by the deductor. So that is the major change, but it will be coming from 1st April 2027. We would be sharing you, Prashantji, the new income tax rate threshold limits and the TDS rates, a single Excel file for the same. Will give you the same. Okay, Chi, forms for TDS and TCS, based on the provisions, if we can see, there is no major changes. So we don't expect a major change in the forms or the mechanism of TDS return filing. There would be only the section references which would be changing. So apart from that, for the Income Tax Act, any new forms would be introduced that we will have to see. But for TDS and TCS, we don't see that any major changes in the forms, only the references would be changed. And government has said that they would be giving ample time and they would be introducing the same very soon. Yes. Rao sir, you are very correct. From henceforward, from 1st April, whenever we would be making any remittance, we would be mentioning the tax year because the two period, the previous year and the assessment year concept has now been removed and the tax year concept would be there. So we would be seeing updates in the income tax websites where the tax year period would be coming and whenever the this period would be coming, we would be mentioning is at 26, 27. We'll try, Sandeepji. If there are many changes in the forms, we will definitely take a webinar when once the forms are made available by the government. FY is tax year, very correct, and AY concept has been removed. So government has removed this AY concept so that there is no confusion relating to refer to two periods. Actually, only one period is okay. So that's the reason the government has given it a new name, that is tax year. Lokesh, this is just a clarification relating to manpower services that previously people were interpreting as an employer-employee relationship, because in PF, it is stated that if there is a manpower contractual services, then also we have to ensure that the PF is getting deducted for all the manpower side. So there were interpretation issues. So government has now clarified that any type of manpower services would be now classified as 190 under 190 under contractual services. But yes, if there is more detail, like it is whether it is a professional services, technical professional services, it will depend based on the nature of services which you are taking. And accordingly, we will have to interpret the services, because there is another two provision relating to the professional services. In that also, there is some bifurcation. One is technical services and second one is the professional services. There is no currently clarification for 26-27, Srinivasji, how the filing would work. We will have to wait and see how the government notify the new forms and by what time their IT system get updated. Yes, Lokesh, PF Act is a separate act and Income Tax Act is a separate act. So in PF, definitely the liability of the principal employer will be there for to ensure that the contractor's employees' PF is getting deducted and being remitted to the government.
I hope we are done with the questions. Now we can conclude, sir.
Yes.
For any further queries, you can reach out us at figmentglobal.com. We will come back with more such webinars in the coming days. Thank you. Thank you
Thank
all.
you all for joining. Thank you.